Looking at the drivers that led to the 12% PBT that we saw in the first half to about 6 billion shillings, and I saw there was an increase of about 5% on the net interest income. But on the flip side, we saw a 5% negative performance on the non-funded income. How did these two impact on the performance?
Yeah, I mean, like you saw, if we start with net interest income, firstly, we saw a strong growth in our assets. So you've seen we're now growing faster than we've grown in the last 7 to 8 years. Yeah, so we've grown our asset book by over 20%, which I think we're excited about because it means we're on strategy. Customers are finding us relevant and borrowing money from us. So that would obviously drive our interest income on loans and advances. Where we obviously experienced slight decline is obviously the margins have come down. So that's happened on the interest on loans, but also we're seeing the interest expense also pushing up slightly in terms of the amount of money that we're paying on deposits. So that obviously has compressed for all banks. So when we compare, we're actually doing well relative to our peers. On the non-funded income, like we explained during our presentation, we experienced a slight decline. Number one, our FX income didn't grow as much just because we had relatively stable exchange rates during the course of this particular period. But we also had mark-to-market losses on our Visa shareholding. We actually have shares in Visa as a global company, and those were subject to the New York Stock Exchange adjustments. So that is not really a function of our business performance. It's just the accounting treatment. So that brought down by fairly significant amount.
Jeremy, you've mentioned something with regards to the asset growth, and which is at 20%. Of course, it's very impressive because Barclays initially had negative growth on that front. But now, comparatively looking at it from the liabilities point of view, asset book is growing faster than the liability. It's 20% versus 7%. What's the plan to ensure a healthy balance?
What we found we're doing is we're quite particular around which liabilities we want to put on the book. And we have customers who demand extremely high interest rates. And because we've got a mix of banks in the sector servicing a mix of clients, you find that in some cases we are not prepared to pay the highest interest rates for deposits because we've got a big network and we can use that network to bring in deposits. So one of the strategic focuses is how do we drive more of the transactional balances. So we've got a number of strategies. We're already growing on the corporate side. You've heard about integrating our systems with our corporate clients, using our online banking platform to process payments. So more of the corporate clients are coming. That's why you've seen a 26% growth in corporate liabilities, because they come and they process everything from their payroll to their payments, etc. So that will continue to push. As we integrate more the SME will be another growth engine because it's largely liability-led. Yeah? So we will push that segment even further. The third is on the personal side. We've seen the bankable population grow, and we are now coming up with products we feel are relevant. So the largest one we've done, or most recently, is Zidisha, which I think is a program which encourages savings. So today, even with as little as 10,000 shillings, you can open an account with us and get as much as up to 10% interest. And what we do is we pool all these deposits. So even many small depositors can pool their money, and because of the pool, they get higher rates.
Of course, keeping track on the revenue front that you've just alluded in that answer. And of course, one of the key things that I picked up was some two sectors that Barclays Bank wants to get into is mortgage and also agriculture. Let's talk about that and of course what it means for the bottom line.
Like if we start with mortgages, I think mortgages was a business we were reacting to as opposed to going out and actually getting. Now we've said, look, more and more people want to own their own homes. So we want to help them achieve their dreams. So what we've done is we're really looking at our entire processes to reduce the turnaround time, speed up the credit decisioning process, speed up the fulfillment process after you've got your approval and you're trying to buy a house, because there's so many stages. We talked about agriculture. Agriculture is important as a mainstay of the economy. So we're pushing the agricultural segment. We're actually starting an agricultural division. So these are people who are experts. We are very clear around the segments even within agriculture. Agriculture is very broad. And based on our experience of the African market and the Kenyan market, there are some areas which are higher risk than others. So for example, we're quite active in floriculture, horticulture, tea. There are a number of areas that we are actively participating. So even within agriculture, we don't do everything, but we do cover most of the areas that our customers are interested in.
The Central Bank of Kenya has some new capital regulatory requirements on adequacy ratios. And I did recall in the investor briefing something was mentioned with regards to retaining of earnings. Has that got to do anything with the ensuring that you show up your core capital ratios?
Yeah, I mean, ordinarily, like if you look at last year, we paid a small interim dividend, yeah, which was 20 cents. But what we looked at is, when we look at these new capital requirements, so we've got the Basel operational risk and market risk, which has taken some of the capital that we could count out. We've then got new prudential guidelines, which have raised the thresholds for total capital as well as core tier 1 capital. So when we looked at that, and now we're growing our balance sheet much faster, that puts different pressure on our capital levels. So what we looked at is we had the highest core tier 1, roughly running at 95%. When you look at our peers, they were lower than 70%. So we've said, look, it's more efficient if we inject tier 2, which we've said will be in the region of 4 billion. We've obviously got the option to look at going out into the local market versus getting funded from our parent. Early indications are it would be more efficient for us to go to the parent because we can borrow at a lower level, which gives our broader shareholders a higher return.
Let's now talk about oil and gas, which of course has attracted a lot of interest, not just from the banks, but also from other foreign investors with regards to the newfound discoveries. But now looking at it from the grand scheme of things and participation of Barclays, of course, I've also seen you participating in power generation and transmission in terms of lending. What are some of the other major projects that you are eyeing?
I mean, I think when we're looking at infrastructure projects, you know, we've seen recently from the trip to the US, there's a lot of focus on power. We have skills in oil and gas and power. We're the lead arranger to help Gachenge raise $5 billion and to put in place 5,000 megawatts. We spoke about the Thika power plant, which is going to add another 87 megawatts. We're focusing on clean energy because that obviously gives us some flexibility around fuel prices. So we're working with Gachenge there. We're also working quite closely with KPLC on supporting them on their working capital needs. But I think the bigger projects will probably come in form of partnerships because you need long-term funding, of which some of the other players, like Africa Development Bank, World Bank, IFC, those can be able to provide probably more effective longer-term financing, and we can come in and play our part up to 10-year financing. So we're already in discussion with various of the players to be able to support them on that side. On the oil and gas, as I say, we've done the Marriott drilling asset financing, which was the first of its kind. That's on the back of Talos exploration. And we have a number of players that we're looking at as this sector emerges. So we see ourselves playing quite a leadership role, networking both our African operations with UK, US, where a lot of these companies are listed on those stock exchanges. So we're quite excited that we'll play our part as we develop this economy.